Yo, 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 what's going on, family? Welcome in to the Multiply Your Money Masterclass. We are so excited to be with you all this evening. So excited to be here because we're going to be learning about the two most important lessons when it comes to building wealth. Number one is how do you legally shelter your money from taxes? And number two, how do you figure out a way how to multiply your money so that your money can work harder for you than you work for it, right? If you want to build wealth, those are the two most important lessons you need to learn. How to shelter your money from taxes, how to have your money make money for you. And the good news for you is we're going over both of those strategies in today's masterclass. So we call it Wealth Wednesdays for a reason. And that's because we're going to figure out how to build wealth and save on taxes on this Wednesday. I'm sorry, say Sunday. I'm tripping. It's Sunday. My bad, y'all. It is Sunday, March 1st. But yeah, regardless, we're going to talk about how to build wealth and how to save on taxes tonight. So as we get ready for everybody else to coming to this class. Do me a favor, grab something to take notes with, grab a pen, paper, notepad, something to take notes with, because we do not send out any recordings for this workshop. So, in order for you to get everything that this class has to offer, I recommend that you grab something to take notes with and make sure that you cut out all distractions. Like I'm a firm believer, y'all don't have to believe what I believe, but I'm a firm believer that how you do anything is how you do everything. So, if you give this class half of your attention, then you're probably only going to get half the results that this class has to offer. And I personally feel like you deserve to get all of the results that this class has to offer. So, if you could shut off all distractions, TV, cell phone, all those things, just lock in with us. We're only going to be here for about 75 to 90 minutes. So all I ask is that you just give it your undivided attention during this time, right? Because if we're going to make sure that 2026 is the best financial year of our lives, we have to make sure we do what's required to help us get there, right? And so that is my announcements before class, but two other announcements before we get started. Let me pull up my chat here. There we go. Okay. So drop me if it's your first time ever seeing me before. Drop family if you have seen me before, and that way I can know how much. Because if you all have seen me before, I might give y'all go straight to some of the advanced strategy. If you never seen me before, then I want to make sure I don't skip anything in today's class. So Willie said me first time family. Okay, so it's a lot of first timers in the room. Okay, so I know how we're going to teach tonight's class. Now we call this the multiply your money masterclass, right? Because we're going to teach you all how to multiply your money and how to save on taxes. But is it okay if we actually give away some money in tonight's class? Let me know. We don't have to, we hear me, we don't have to do this at all. Okay. We don't have to do this at all, but y'all please just let me know if that's something y'all want to do. Of course, that's always good. Okay. Well, we're gonna do a giveaway today. I'm gonna wait for my business partner George to get in here to see how much he wants to give away because I don't know. We might give away a lot, a little in the middle. But the reason we do a giveaway is because we believe in giving people incentives to do what they're supposed to do anyway, right? So we believe in helping people give people incentive to do what they should do. So the goal is for you to pay attention to give this class your undivided attention. But to make sure you do that, we're going to do a cash giveaway at the end. But if you want to enter that cash giveaway, there's a few things that you have to do. Now, this is only if you want to enter the giveaway. If you don't want to enter the giveaway, you do not have to do anything I'm talking about. Okay. So to enter the cash giveaway, you got to do three things. Number one, you have to be one of the most interactive people in the chat, right? I can't, with this Zoom setting, I cannot see you all's faces, but I can see the chat. So I see you, Jordan Majestic. I see you, Ken Harrison. I see you, Lizzie Romeo. I see you, Kimmy Atkins. So the more, this is me being just real with y'all, the more I see your name in the chat, the easier it is gonna be for me to remember your name at the end when it's time to give away our winner. So the more I see your name in the chat, now the chat's going crazy, right? The chat's going crazy. The more I see your name in the chat, the easier it's gonna be for me to remember your name. Now, oh, George, what's going on, brother?
What's going on, man? How are you?
I'm doing great, man. Excited for tonight's class and these people to talk me into doing a cash giveaway.
They talk you
So,
into it? I have. You sure about that?
well, I wanted to do it, but they could have said they didn't talk me out of it.
Oh, okay. Okay.
They didn't talk me out of it. So, I was giving them what I want them to do to enter the giveaway. But if it's anything you want
Mhm.
them to do, feel free to add on. But so I just told them to be interactive in the chat. And then the second thing, team, can you all pause the chat and drop the link to our YouTube channel? The second thing you have to do, y'all, is simply just subscribe to our YouTube channel. We
Mhm.
put out 2 videos a week, one on investing, one on taxes. And the only reason we ask you to subscribe is so we can give you more value outside of just this free masterclass. So if you subscribe to the channel, you'll be entered to win. And then George, is there anything they have to do to for you to win the giveaway?
Yeah, for me, I would say so. They're gonna learn how to stop overpaying unnecessary money in taxes from you. For me, I'm gonna show them how to invest that money so they can multiply their wealth. And I just happen to be going second. So for me, it's very simple. You just gotta stay to the end, right? Why? Because from where I'm from, giving away money to someone who hasn't even heard what you have to say, that's a tall order, right? That's a tough pill to swallow. So if you guys just stay to the end, which is what I'm assuming all you guys are planning to do anyway, you guys can get incentivized and potentially win some money. But here's what I can assure you: the reason why that is my incentive, or the thing that you have to do to win the money, is because I know that if you stay to the end, the value that you're going to get out of it is going to feel like you won much more than the cash giveaway. And so that way, by extension, everybody will be a winner by simply staying to the end. So that is mine. Pretty simple.
Cool. Well, if that's the case, I'll go ahead and get started with the tax lesson, and I'll let you come with the investing lesson right after.
Sounds good. Thank you.
Cool. So we'll get started here, family. Actually, something I love asking. Now, this is just for me, y'all. I love asking this question because I feel like there's I love this vulnerability and transparency. So honestly, right? Let me know in the chat. Let me know if anybody in this room has ever came to one of these free workshops or free master classes or whatever they call it. And somebody told you they were going to teach you something, but then all they tried to do was like sell you something the whole time, right? Like, let me know in the chat. Like, they promised to teach you about real estate, or it was about taxes, or invest, like whatever the case was. They promised to teach you about something, but then all they tried to do was sell you something the whole time. Like, I only bring it up because it happened to me a few weeks ago, right? It's new year, new money. Everybody's like, 'cause I'm learning just like you all, right? I'm learning new skills, and it was just a big sales presentation. So do me a favor, y'all. Do me a favor. Drop this ain't that in the chat. Okay, please drop this ain't that in the chat because with this masterclass, you're going to learn more about money, about taxes, and about investing in this free class than you did in any other class you've ever attended. That's my promise, right? Now, in the spirit of transparency, let me say this. At the end of today's class, after me and George give you some amazing tax and investing strategies, we are going to give a few of you all the opportunity to continue learning from us. Okay? And to be even more transparent, that opportunity is going to require a $2,000 investment. Okay? Like cards on the table. Now, here's the thing that's not important because your only job is to get as much of the free information as you possibly can in this next 90 minutes. Our job is to give you as much free information as we can in this next 90 minutes. And at the end of today's class, you can make a decision whether you want to continue learning from us or not, right? Like everybody in this room is grown, right? So just get the free information. If we don't give you any strategies that you like for free, then don't even try to pay us at the end. Like, is that fair? Cool. Like, drop fair in the chat. I don't know why more people can't be that transparent, but like that's I always believe in transparency. So with that being said, now let's go into the class. So I'm gonna go ahead and share my screen. And cool. Now, first things first, who am I, right? My name is Carter Cofield. I'm a licensed CPA. I've been a CPA for over 13 years. Not only am I a certified public accountant, but I was named one of the top CPAs in the country by the number one accounting magazine in the country. So much so that they put me on the cover of the magazine, right? Now, why do I show you all this, right? I don't show you all this to brag or talk about my accomplishments because that's not important. But I do understand that when it comes to the IRS and when it comes to taxes, for most people, this is a really scary subject. So all I want to do is give you the peace of mind that any strategy I go over with you tonight, not only have I done it for thousands of clients, I've done it for myself as well, right? So I want you to know any strategy you learn, you can utilize this strategy and it's been tested and tried. Okay. So that's number one. Now, in the spirit of transparency, I want to show you all something that I think most people would not show you all. And that is a copy of my actual tax return. Because here's what I believe. If I can't help myself save on taxes, how am I going to help you? Right? If I can't help myself save on taxes, how am I going to help you? So I want to show you all what I was able to do for me. So back in 2021, I had two businesses. One did $270,000 in income. The other one did $540,000 in income. So combined, we did a little over $800,000 in revenue. Now, small problem. If you make $800,000 living in the United States of America, you got to pay this thing called taxes, right? And you would be facing a tax bill to the tune of $307,000, which is insane, right? So the good news is we didn't pay $300,000 in taxes. The better news is when I filed, these were the results. So I owe the state of Illinois $4,238. So the state of Illinois got their 4K. But I got a federal tax refund of $14,586. So some of y'all are asking, did you just say $14,000 refund? Yes, I got a $14,586 refund. Now, most of you all are asking a very, very, very important question. The question is, how is that possible? How? How is that possible? Right? And the answer is simple. Once you learn the rules of the tax game, you can start to win the tax game. It's that simple. Once you learn the rules of the game, you can start to win. And my goal with this presentation is to teach you the rules of the tax code so that you can win the tax game. So if you're ready to win the game, can you just drop win the game in the chat? Please. Just drop win the game in the chat. All right. So now the question is, how do we do it? Well, here's the first lesson I need you all to understand. This is something you should write in your notes. How you make your money is more important than how much money you make. Okay? How you make your money is more important than how much money you make. Middle middle class people focus on making their money as employees, while wealthy people focus on making their money as business owners and investors. As a matter of fact, high income W-2 employees pay the highest tax rate out of anybody else. They pay higher taxes than millionaires. They pay higher tax rates than billionaires, right? As a matter of fact, if you're a W-2 employee, just drop W-2 in the chat. Like W-2 employee, no real estate, no investments, strictly W-2, no side business, no nothing. I see you, Daw, I see you, Tina, I see you, Joy. Okay, let me be very clear. There is nothing wrong with having a W-2 job. Nothing wrong with having a W-2 job. But there is something wrong with letting your job trick you into believing that that is the only way that you should be earning income, right? Because in order to save on taxes, like you can keep your W-2 job, but you have to find a way to become an owner or investor. So you don't have to quit your job, but you have to find a way to either become an owner of investments, a owner of assets, or an owner of a business. Because here's the thing, whatever you're doing from 9 to 5, somebody else would pay you to do that same thing from 5 to 9. Once you start earning money outside of your employer, you can start then winning in taxes. Because if you don't, let me show you your reality. All my W-2 employees who don't want to become an investor, who don't want to get into real estate, who don't want to start a business, this is your reality. See, you make money first, right? You make money first, and then you pay taxes 3 times before you see the money. You pay federal tax, you pay state tax, and you pay self-employment taxes. So you pay taxes 3 times before you even get your paycheck, and then you get to spend what's left after they took 30 to 50% of it. That is your current reality. But when you become a business owner, when you become an investor, things change, right? Things change. See, all my business owners in the room, drop biz in the chat. All my investors in the room, drop investor in the chat. And here's the thing, y'all. If you have a W-2 job, your W-2 job is your first business partner because you take the money from your job to buy real estate and now you're an investor. You take the money from your job to buy a business that you own but do not run. Now you have a business, right? But as a business owner or investor, let me show you how taxes work for us. We make money first, right? We make money first. Then we get to spend our money on tax deductible items like our rent, like our travel, like our trips, like our vacations. We get to spend our money on tax deductible items, but guess what? Then we pay taxes last. But here's the secret, y'all. Here's the secret. Not only do we pay taxes last, but guess what? We're going to implement tax saving strategies throughout the year. So come into the year, we don't have any taxable income left to pay taxes on. So not only do we pay taxes last, but we get to manipulate our income to see how much taxes, if any, that we have to pay at the end of the year. Are y'all picking up what I'm putting down? Somebody just dropped got it in the chat. That's helping somebody. Okay. So now that we understand what to do, let's talk about how to do it. Right? Let's talk about how to do it. Now, you can do this by implementing what I call the tax-free wealth framework. So there are three levels to tax saving strategies. If you implement all three, you can live tax-free. Level one, tax deduction strategies. Level two, income shifting strategies. Level three, depreciation strategies. Let's break them down. Tax deduction strategies. Now, just take a screenshot of this. This is one of the biggest lines in the tax code. It says, IRS Code Section 162A says, allows a deduction for all the ordinary and necessary expenses paid or incurred during the taxable year in a carrying trade or business. What does that mean in English? It means if you have a business, if you have a 10, if you're a 1099 contractor, if you have real estate, any expense that's ordinary and necessary for you to operate that business or that 1099 contracting gig, that expense is tax deductible to you. Now, here's what most people don't realize. There are over 400 different tax deductible expenses that you can take once you're an investor or a owner, right? This is a small list. There's over 400 different deductions. Most people don't know what the deductions are, so they end up missing out on them. So what I realized, I said, wait a second, you mean to tell me like the moment I start the business or the moment I become an investor, any expense that is like most of my personal expenses immediately become tax deductible business expenses once I start the business? I said, sign me up. And that's just level one, right? Now let's talk about level two. Level two is income shifting strategies. How do I shift money off of my tax return and put it somewhere else with a lower tax bracket? We can do this via private family foundations. We can do this via fiscal year management companies. And we can also do this via paying our children, right? So this is how do I shift money off my tax return and put it somewhere else at a lower tax bracket? This is an advanced strategy. Now, level three is depreciation strategies. And for those of you all that don't know what depreciation is, let me give you the IRS's definition. It's the IRS giving you a tax deduction today for the possibility of an asset losing value in the future. And with the new tax bill, we have the return of 100% bonus depreciation. So that means that there are certain assets that we can buy and write off 100% of the cost of the asset against our earned income. And here's where most people make mistakes. Most people think that depreciation only works with vehicles. No, depreciation works with vehicles, it works with equipment, and it works with real estate. So now that you know the three levels of the tax-free wealth framework, if I only had time to dive deep on one of the levels of the tax-free wealth framework, which level would you want me to dive deep on? Would you like me to dive deep on level one, tax deduction strategies, level two, income shifting strategies, or level three, depreciation strategies? Let me know. Um, we got some ones, we got some twos. Huh. We got a pretty mixed, okay. We got a pretty mixed bag. Okay, how about we do this? How about we do this? Would it be helpful if I went over a client case study on how we helped the client shelter over $200,000 from taxes and implemented all three levels of the tax-free wealth framework? Would that be helpful for anybody in the room? Okay, great. Let's do it. Let's do it. So, um, This is a real client case study that we had with one of our clients in our firm. And this guy came to us and he was generating. Hold on, where is? Let me see if y'all can see my screen. Let me know when y'all can see my iPad. For all my visual learners, this is for y'all. Let me know if y'all can see my iPad. Okay, so this client, he had net income in his business of $200,000, right? $200,000. Now, that will put him in the 30% tax, 32% tax bracket, which means that he will be facing a $64,000 tax bill. That's too much. That's too much. I don't know about that. $64,000, that's too much, right? So he came to us and he said, is there anything you can help me do about it? We said, absolutely. We can help you implement the tax-free wealth framework, and we will help you eliminate some of these taxes. Now, let me say this right now. Some of these strategies I'm about to go over are for business owners. But some of these strategies I'm gonna go over, W-2 employees can also take advantage of them. So I'm gonna give you strategies, whether you're a current business owner or whether you're a W-2 employee, so that you can get strategies over everything that we're talking about. So please, please, please pay attention to these examples. Okay. So, the first thing that we were able to do is we looked over his personal expenses and say, is there any personal expenses that can be written off in his business as business expenses? And so we looked over and we noticed that he was missing a lot of deductions. One of the main deductions he was missing was he had a business that he worked from home. So not only did he have a home office for his business, but his spouse, who also worked in the business, had a home office as well. And they weren't taking any of the home office deduction. So we asked them, we said, why aren't you writing off your rent on your taxes? Did you not realize you can do that? He said he didn't know. And so we said, okay, well, if you have a business and you have a place you work from home, we can take that space and write off that portion of your home against either your mortgage or your rent. And so he said, well, which home office should we take? Should we take my home office or should we take my spouse's home office? What do y'all think the answer was? Both, right? Both of them. So we got to combine the space of his home office plus his spouse's home office and multiply that square footage times their rent, and he got a major deduction. So when we looked over his personal expenses, we were able to increase his personal to business deductions by $20,000. That means $20,000 of personal expenses that he was already paying for now can be written off in his business. So that was the first thing. The second thing that we realized was this client loved to travel and he loved to travel with his family. And so here's the thing, like I love traveling as well. Like I love traveling much as the next person, but I understand the IRS will easily let you turn any personal trip to a tax deductible business trip if you find business activity in the location that you're traveling to, right? So the question is, how do you find business activities, right? In the location that you're traveling to? Well, two easy ways. The first way is, do you have any entrepreneur friends or business partners in that city? If you do, take them out to dinner. Then you pay for the dinner, and on the back of the receipt, you write down who you sat with, what business was discussed. Upload that receipt to your bookkeeping software, and guess what? That business meal, even though it's just an hour, counts as business activity for the entire day. So that's one way. Another way is, do you go into a website called eventbrite.com or go into a website called meetup.com? These are two websites that have hundreds of different networking events and conferences in every city almost every day of the week. So you buy a ticket to the networking event, attend the event, keep your badge for documentation, and then that counts as business activity for the entire day. And if you do this during the weekdays that you're traveling, the IRS doesn't care what you do over the weekend. 100% of the trip is now tax deductible. 100% of your flight tax deductible. 100% of your hotel or Airbnb is tax deductible. And then 50% of your meals is also tax deductible. So we were able to increase his travel deductions by $20,000 by showing him how to find business activities in the places he was already going. So now the next thing is vehicles, right? The next thing is vehicles. So this client was told by his previous CPA that he couldn't write off his vehicle in his business because his vehicle was in his personal name. Has anybody else ever heard that? That you can only write off, you can't write off your vehicle if your vehicle's not in your business name? Okay, so here let me be very clear about that. That is false. Here's the reality. The IRS is not concerned about whether the car is in your personal name or your business name. What the IRS is concerned about is, do you plan on using this vehicle at least 50% business use? If the answer to that question is yes, then that means you get to write off that percentage of all expenses related to your vehicle. Interest on your car note, gas, repairs, maintenance, oil changes, car washes, car details. All expenses associated with your vehicle are now tax deductible, including depreciation, right? Including depreciation. And here's the second thing people misconstrue. Most people think that you can only depreciate a vehicle if it weighs over 6,000 pounds. That is also false. The IRS will, like, you can write off up to $20,000 in depreciation deduction, whether your car weighs over 6,000 pounds or weighs less than 6,000 pounds. So with this client, we were able to increase his vehicle deductions by $23,500 because he didn't think that he could write it off because his vehicle was in his personal name. That's $23,500 in increased deductions. And for all my W-2 employees out there, guess what? With the new tax bill, you can write off up to $10,000 in vehicle interest payments if you buy an American-made vehicle. So now W-2 employees with a personal vehicle can also write off some of their vehicle expenses with this new tax bill. That is why it's mandatory that you understand the updates to the tax code. Now, now write this down in your notes. This is one of my favorite quotes. The more you invest, the less you pay the IRS. Write that down. The more you invest, the less you pay the IRS. What do I mean by that? Well, real estate is one of the most tax advantaged assets that there is. And there are certain strategies with real estate that will allow you to write off a portion of the value of your real estate against your active income. It's called the short-term rental loophole. And so what we did was we helped this client acquire a real estate property. And we did a cost segregation study on the real estate property, which allowed him to write off to get a $80,000 tax deduction for purchasing a new real estate property. So not only was he increasing his real estate portfolio, but he got an $80,000 tax deduction for doing so. Right? And this is why real estate is one of the most tax advantaged assets that there is. Right? And so now here's the thing. Here's the thing, y'all. For all my W-2 employees that are like, oh my God, why I can't do any of these strategies. How can I use the tax code to win? So all my W-2 employees that feel like the tax code isn't made for you, watch this. Now that you have a real estate property, wouldn't it make sense to get a property manager to manage your property so that you don't have to manage it yourself? Wouldn't it make sense to get a property manager? Or could it make sense? Okay, cool. So now that you're going to get a property manager, couldn't you set up your own property management LLC and pay your property management LLC for the management of your property? Wow. Guess who just became a business owner? So now that you have your own property management LLC, that you have income coming through, now guess what? If you drive your vehicle to check on your property, you get to write off your vehicle expenses in your property management LLC. Now, if you travel to another state to acquire a new property, that is now business travel because now you're about to go acquire another property for your LLC to manage. Oh, now that you have this property management LLC, if you talk to your tenants on your cell phone, now a portion of your cell phone bill now becomes tax deductible. You see, here's what I learned. There are two types of people in the world. There are people that make excuses on why they can't do something, and there are people that execute and find out how to do something. It is up to you to choose your tribe. Period. So now anybody can win the tax game, again, if you become an investor or an owner. Now, let's keep this thing going, y'all. Let's keep this thing going. I know some of y'all picking y'all head up off the floor from that last strategy. I know. I told y'all this is gonna be one of them classes. I told y'all. Anyway, solo 401k, right? This client, because he was a business owner, he didn't have a traditional 401k, but he didn't realize he can set up his own 401k. It's called a solo 401k. And in 2026, you can put up to $24,500 into this account. But not only that, the IRS will give you a dollar for dollar tax deduction for the money that you contribute. So wait a second, you mean to tell me I can contribute $24,500 per year into this account and I get a $24,500 tax deduction for doing so? That's crazy, right? And so you can increase your net worth and decrease your tax bill at the same time. Again, the more you invest, the less you pay the IRS. Okay. Now, here's the last thing. Here is the last thing. Let's talk about education. Okay. This is the big one of my favorite questions to ask an audience. Is education tax deductible? Good question. Is education tax deductible? Um, maybe. Yes, maybe. I hope so. Okay, cool. Let me answer the question. The answer is it depends. Carter, what do you mean by it depends? Well, before I go on this tangent, let me just say this because I'm not diminishing education. Like I have an undergraduate degree in accounting, I have a master's degree in accounting, I'm a licensed financial advisor, and I'm a licensed certified public accountant. I have more degrees than a thermometer. You hear me? But also hear me when I say this. We've been tricked by society to think that it is mandatory for us to go to college, spend $100,000 on tuition, no matter what we're aspiring to be, right? And that $100,000 for tuition is not tax deductible, right? Like you get small tax credit, American Opportunity Credit, Lifetime Learning Credit, but once you make over $80,000, which most of us do, you're phased out from taking any of those credits. So college tuition is not tax deductible. But watch this. You mean to tell me I can go pay a billionaire like Tony Robbins and go to his conference and learn how to grow and scale my business? I can go pay somebody like Alex Hormozy who made $100 million in a weekend, and I can go to his offices and learn how to grow and scale my business, which I did. You mean to tell me I can go pay these people who are doing what I want to do and who are making the money I want to make, and any money that I pay for their coaching or their courses or their conferences is 100% tax deductible to me, the business owner, to me, the investor? Wow. Right? So the answer is the right type of education is tax deductible. My question to you is, are you investing your money in the right type of education? And that is a question that only you can answer, right? But this client, he was investing, he had invested about $32,000. He had invested about $32,000 in different coaches and professional services and professional development, and he didn't know these expenses were deductible. So we told him if they are 100% deductible to you, and so we increased his deductions by $32,000, right? So now let's do some math here. If I 20,000 plus 20,000 plus 23,500 plus 80,000 plus 24,500 plus 32,000, if my math serves me correctly, that's $200,000 in newly found tax deductions. Newly found tax deductions. But wait a second. If the client only had $200,000 of taxable income, but we found an extra $200,000 in tax deductions, what does that mean? Somebody let me know in the chat. What does that mean? Oh, that means he has a $0 taxable income, which means he has a $0 tax bill. So this client went from having a $64,000 tax bill to having a $0 tax bill by understanding the rules of the tax game. And like I told you all at the beginning, I'm gonna say it again. Once you learn the rules of the tax game, you can start to win the tax game. And here's the thing I want all you all to understand. Here's the thing I want everybody to realize. The easiest way to make more money is to figure out how to pay less taxes. Period. The easiest way to figure out how to make more money this year is to figure out how to pay less taxes this year. And now that you learn how to legally shelter your money from the IRS, it's time for you to take these extra tax savings and now begin to invest. And that, ladies and gentlemen, is part one of today's masterclass.
All right, all right, all right. I mean, I know it's Sunday and some people may not have made it to church today, but nobody asked you to bless the people with a financial sermon on this good Sunday. I don't think that's what was required, but we appreciate it nonetheless.
Yes, sir. Yes, sir.
All right, so now that you guys, matter of fact, if Carter shares some information with y'all that completely transform your perspective on taxes, drop tax free in the chat for me real quick. I'm just curious. I'm just curious. Drop tax free in the chat for me. Okay. Are y'all ready to learn how you can take this money that you're no longer going to be overpaying Uncle Sam and learn how you can invest that money so that you can build wealth 3 times faster? Drop me in the chat if that's you. Drop me in the chat if that's you. Okay, cool. I'm gonna, if I can get into my iPad, I think my son tried to log into it one too many times. Let's see if I can get in here. Gee, star. All right, we'll figure it out. Anyways, welcome to part two of the Multiply Your Money Masterclass, and I'm your host, George Achampong. So, a couple of housekeeping things for those of you who might have not come in at the beginning of the class. Number one, make sure you continue to stay active and engaged in the chat, just like you are right now. Number two, make sure that you stay to the end because that is how you're going to be entered into our giveaway. And last but not least, make sure you subscribe to our YouTube channel so that you can continue to get this insights and information even once this class is over. Okay? All right, so let's get this class started. I'm going to share my screen here in a second, and then we are going to get this show on the road. All right. Got a lot of gems to teach y'all today, as y'all can see. I got a lot to teach y'all. So y'all got to pick up what I'm putting down today. All right, welcome to part two of the Multiply Your Money Masterclass, the blueprint to retiring rich 3 times faster than traditional financial advice. And for those of y'all who do not know who I am, my name is George Achiampong. I am a wealth manager. I've been doing this for over 15 years. I've been fortunate enough to be ranked as one of the top 100 advisors in the entire nation out of over 100,000 advisors and wealth managers, which puts me in the top 10th of 1% of all wealth managers. Okay. Now, again, I don't share that to uh, get you guys to give me a pat on the back. I share that because I know there's a lot of people online who are sharing a lot of information and you don't know who to listen to, right? And so I want to make sure you guys feel confident that I'm someone that you can listen to in order to get the results that you're looking for. One thing that I think is very important for you guys to understand is that the execution is on you. If it was just about information, we'd all be billionaires with 6 packs. Okay, we'd all be billionaires with 6 packs. Here's how I know. Let's play a little game. Okay. By a show of virtual hands, how many of you guys were ever on social media before and saw a workout, a meal plan, a financial tip of something, and you wanted to remember it, and so you hit the save button or the save feature on the social media app? But if we're being honest and we logged into that social media platform right now, you'd have a bunch of things that you have not done that you saved inside of that app. Is that fair? Is that anybody in this room? All right, same principles apply, but maybe you saw something that you wanted to remember and you screenshotted it instead, right? But if I were to go to your camera roll right now, would I see a bunch of screenshots for things that we have not executed on yet? Is that fair? Okay, cool, cool. Thank y'all for being honest on this Sunday. And last but not least, let's say that you had a goal or dream or something that you wanted to do and you wrote it down on the notes app of your phone, right? But you ever logged into that notes app and then you search for what you were looking for only to realize you have wrote down the same thing two or three different times on three different notes? Is that anybody or is that just nobody ever been there before? Huh? Okay, cool. Why do I bring that up? I bring that up to say it's not about stockpiling information, right? It was about implementation. We actually have to do something with what we learn. So if you are going to take something away from today's class and actually do something with it, drop execute. Drop execute in the chat. I want to see who my executors are. Okay. All right, cool. So I know a few minutes ago, or whenever Carter's presentation first started, he shared with you his tax returns from, a number of years back. I want to take it back before I even became a financial advisor, right? And what you're looking at is a screenshot of not one but two of my bank accounts, and two of those accounts combined was less than $200, right? Two of those bank accounts combined was less than $200. For any of y'all got kids, y'all probably heard of the term two under two, right? They say it's hard to have two kids under two. I'm gonna tell you what's equally as hard, having two bank accounts underneath $200, okay? And so I wanted to screenshot this because many of you guys probably have vision boards to remind you of all the things you want to do, all the things, all the places you want to go, all the things you want to accomplish, right? Well, I have that as well. But in addition to that, I have something called a never again folder. And on my phone, it is a screenshot of all the moments, or at least some of the moments in my life where there was moments where I never wanted to go back to. I never wanted to log into my online banking, right? And see this number again. So I wanted to remember it, right? Now the question is, how do I go from having two bank accounts with less than $200 to then having multiple investment accounts? The one that we're looking at right here had over, I made over $12,000 in a single day, right? And I didn't have to look at charts. I didn't even have to log in. My money made me $12,000 that day, right? How does that happen? The good news is I'm going to show you in today's class exactly how many of you can do the same thing. And just so you know that this isn't something that just works for me, I went and looked at some of the screenshots from, my friends, family members, clients who have done what I'm going to teach you today. One text message, I had a friend that texted me and said, my investment account has gained $4,800 today without me doing a thing. I just logged in for the day, saw that she made $4,800. My personal favorite, though, is I knew I had a client that was about to retire. And so I said, what is the formal date of your retirement? She said, December 31st is my last day. I give notice on the 18th. Mind you, this client was 39 years old, had just turned 40, right? Had just turned 40 years old. So traditional retirement age is 65. So I responded with retiring 25 years before traditional retirement age ain't too bad. Now, many of you gonna say, well, George, I'm already older than 40, so maybe this is too late for me. Being able to retire a second, minute, hour, year, 2 year, 5 years faster than whatever trajectory you're on right now, I think is still a good deal, right? So, regardless of how far or how early you are in your journey, learning how to get there faster than you currently are on pace to do is always a good idea. Now, before we get into the meat and potatoes of the presentation, one thing I really wanted to do is shape your perspective on why you need to make sure that you're investing in building wealth. Okay. And the way that I want to do that is by helping you understand that the value of anything is the amount of life you are willing to trade for it. I repeat, the value of anything is the amount of life you are willing to trade for it. Okay. So, George, what do you mean by that? I thought you never asked. All right. So, when I was doing some research, I saw that the average American in the United States makes about $50,000 a year. Actually, let me do a different color. I'm gonna do black. About $50,000 a year. Now, I think the average person in this room probably makes $150,000 a year, right? But I just wanted to go with the stats of what the average American makes. And so you don't log into your bank account on the first day of the year and get to say, oh my gosh, my full year salary got deposited on January 1st. No. Did that happen for anybody here? I don't think so, right? You have to trade something for that salary. And what you have to trade is the hours that you work. So the question becomes, well, how many hours do I have to work in order to get my salary? And so the average person works 40 hours a week, and they do that for 50 weeks in the year. So that is going to equate to 2,000 hours per year, right? Which, if we do the math on that, we're trying to figure out what our time is worth. That's $25 per hour. Okay. Now, the same way you don't log into your bank account on the first day of the year and see your entire salary is the same way that you don't stare at your bank account at the end of the year and say, "Oh my gosh, look at that $50,000 or $150,000 or $250,000 that I accumulated all year long." Most likely, you had to earn that money in order to buy different things. So I then did research. Well, what the heck are we spending our money on? So I looked at the big three: where you live, what you drive, and what you eat. How many of y'all know y'all spend too much money on food? Right? How many of y'all know y'all spend too much money on food? Some of y'all probably got DoorDash on the way right now, or you were at brunch earlier today, right? Am I being honest? Okay, cool. So I didn't want to go with that number because I knew it could be all over the place. Some of y'all might got really expensive taste. Some of y'all might just be door dashing, McDonald's, which I wouldn't advise. All right. So I said, let me go with something that's a little more predictable. And I looked at what is the average price of a car payment in the United States. And I saw it was $500. But then, you got gas. Not everybody has an electric vehicle. And then if I'm being extremely generous and I'm saying that you're a great driver, maybe you got $100 a month for car insurance. So the cost of ownership of this car is about $800 per month. But remember, what we are trying to figure out is the value of anything is the amount of life you're willing to trade for it. So we know that right now you trade 2,000 of your hours per year in exchange, in this example, for 50,000. Some of you might be much more than that, but nonetheless, you trade a bucket of hours of your life for a certain amount of income. In this example, for this person, it was $25 per hour. So if we want to figure out the true cost of the car, we divide the cost of ownership by how much money we make per hour, and we see that the true cost of the car is 32 hours of your life, right? 32 hours of your life. All right. Now, I don't know about you guys, but many of y'all get your groceries delivered, you get packages from Amazon delivered, you work from home. And so many of y'all don't even drive your car 32 hours in a month. So let me get this straight. You're not even getting the useful life out of something that you're trading your life for. Wow. Let that sink in. All right. Let that sink in. You're not even getting the useful life out of something that you're trading hours of your life for. Here's what I realized. Time is the only asset that we spend without knowing how much of it we have left. Right? This is what we call the liability side of the equation. Okay. Now let's talk about the asset side of the equation. We're going to use the same individual here who makes $25 an hour, but the difference is this time, instead of buying a liability or a depreciating asset, I should say, we're going to buy something that appreciates. So we're going to make an investment in the stock market. Right now, I'm sharing this presentation. I'm writing on my iPad. I'm sharing it to a MacBook. I'm writing with my Apple Pencil. And for those of y'all who are helping me out with my math, you might be using an iPhone, right? So it's safe to say, just for an example, Apple might be a good company for us to use as an example for a company that you can invest in. And let's just say, for example's sake, that you can buy a share of Apple for $100, right? A share just represents a unit of ownership. So if a company was a pizza, a share would be a slice, right? You can own a piece of the company. So in this example, if I make $25 an hour and I buy one share of Apple, what is essentially happening here? I'm essentially storing or buying back 4 hours of my life. Well, George, what do you mean by buying back or storing 4 hours of your life? Well, if we can agree that in terms of marketplace value, this for this particular individual, $25 is the equivalent to an hour of their life in terms of market value, right? So if it costs me $100 to buy a share of Apple and an hour of my life is worth $25 an hour, effectively, if I believe I'm in buying an investment that will go up in value, I am storing up 4 hours of my life, right? Inside of this investment. Now, here's what's interesting. Many of us know or would believe that the investments that we make, like Apple, 5 years from now, there's no guarantee, but we believe that it'll go up in value. So 5 years from now, that $100 share could go to 200. And that means even if I don't invest another dollar, I've now stored up 8 hours of my life, right? But how many of us know that car 5 years from now, do we think it's going to be worth more than we paid for it or less? Many of us understand it's going to be worth less, right? So let me get this straight. When I spend money on liabilities, they'll be worth less in the future. When I spend money on assets, they'll be worth more in the future, right? So this is why it's so important to spend money on investments because at some point in time, you're going to want to say, know that life still costs. I still got to spend money on food. I still got to pay taxes, right? I still want to travel. But if I don't have something that can continue to produce income independently of me, guess who will always have to do the producing? Any guesses? You. And that is why we invest. We don't invest because we want to figure out the next hot stock. We don't invest because we want to beat inflation. We don't invest because it's the right adult thing to do. We invest because one day we want working to become optional. It's not about you having to quit. It's about you having the choice on what you want to do when you want to do it. Does that make sense? And that's why we have to invest. And that's why we have to build wealth. Every asset you own is a second, minute, hour, or year towards buying back your time. And this is when it becomes fun because then you can start to look at your money and say, okay, I just bought back another year. I just bought back another year. Because here's the thing, even outside of investment returns, wealth is just a ratio, right? How much money do I have in comparison to how much it costs me to live? Even if the money was in a savings account, if it costs you to live 50,000, if it costs you $50,000 a year to live and you have $100,000 saved or invested, right? You have 2 years of your life that you could do absolutely nothing with if you wanted to, right? If I just made it as simple as possible. And so then it starts making it very hard to spend money on things that don't make sense because it's like, man, that's taken away from me being able to buy back an entire year of my life. Does that make sense? All right. So here's an important distinction we got to understand. Retirement has nothing to do with age. It has everything to do with assets. The unfortunate part is many of us has been operating under this rule that we don't even know called the 40-40-40 plan. And that's where you work 40 hours a week and you do that for 40 years of your life. Ask me how I know. The average person starts getting some level of consistent income by no later than age 25, right? What happens if you add 40 to 25? That's 65. What is the traditional retirement age? 65. So that means the average person is working at least 40 years of their life, assuming they get to retire at 65. And then if they do everything right, right, they'll be able to live on $40,000 a year in income. And this is the one that trips people up. Well, George, what do you mean only live on $40,000 a year in income? Well, let me know if you've ever heard any investment guru say something like this. Invest $400 a month into the stock market, earning 7% per year. And then in 30 or 40 years, you'll have $1 million at retirement. Ever heard anybody say anything like that? Let me know in the comments, right? So here's the thing. Mathematically speaking, they're not wrong. The truth is, that's just a little bit too long. How many of y'all know y'all don't got another 40 years before y'all can get this right? Or another 30 years? Or heck, y'all might not want to do it another 20. Some of y'all like, I don't want to do another 20 days, much less 20 years, right? And so we have to start following a more modern plan to building wealth and not this outdated ideology. So let me explain how this rule works. So if you did everything they said and you had $1 million invested, you have that magical $1 million number. But guess what? If you want to stop working, that means that $1 million is the total amount of money that you have to now live on. That means you can't run out. That means we have to be very intentional and strategic with how much money we withdraw. So someone long before me created this rule called the 4% rule. And the 4% rule states that if you only withdraw about 4% per year from your portfolio, you most likely won't run out of money. How do they arrive at this? Well, your money's going to be more conservatively invested when you're at retirement because you don't want to experience the fluctuations in your portfolio, which means you can invest it in you know, treasury bills or municipal bonds or just things that are lower risk. And on average, you should be able to get 4 to 6% on your money, right? So that means if you're withdrawing 4%, then that means you're only taking out the money that you gained and not the principal, meaning your principal remains intact. So you'll be able to sustain that for the foreseeable future. Does that make sense? Right. But the problem is that's only $40,000 a year. Now, when the person who came up with this rule, you know, 3 decades ago or 4 decades ago, however long ago it was, matter of fact, I'm gonna look it up. I know it's a long time ago. At that time, it was like, oh, you have your house is paid off, your car is paid off, cost of living isn't too bad, inflation isn't crazy. You can live on $40,000 a year 40 years ago, right? A little bit harder to do in today's terms. Can we agree? So I don't know if this is the best strategy, but that's all relative, right? Because if you can afford to invest more, maybe this strategy could work for you. So I still want you guys to understand how this strategy works. First thing you got to do is you got to figure out how much money do you need per month to live. The next thing you got to do is then multiply it by the amount of months in the year, which is 12, because that's going to give you your annual income need. Then once you have your annual income need, then you're going to multiply that by 25, right? Because once you have 25 times your annual income, you have successfully reached your freedom number by these standards. So the person who only needs $3,400 per month, which is about $40,000 per year, that person needs to have $1 million invested. Okay. Now here's where it gets interesting because I know many of you make six figures in the room, right? So it's not the reason why it takes the average person probably 40 years to retire is because if they're making $50,000 a year and they're putting away 10% of their income, that's going to be about $5,000 a year. Now, don't despise small beginnings because if you're putting away $5,000 a year and you do that consistently, right, you too can retire and have $1 million. It's just going to take you, a little bit longer. But the person who makes over $100,000 a year, they say, well, wait, I make twice as much as the average person. So maybe I should save or invest twice as much as the average person. But if I do, though, double my income, double my investing rate, I actually can invest 4 times more than the average person. The problem is many people aren't doing that. One, because they're living above their means, or two, because they don't know where to invest the money. So maybe they're just not investing it at all. Right. And so my point is, one of the best investments you can make outside of understanding my investment philosophy, which I'm about to teach you here in a few minutes, is investing in yourself. How can I become more valuable to the marketplace so that I can have more money to invest? Because your greatest lever to building wealth is not trying to get 100% return on your money. It's having more money to invest in the first place. Speaking of investing, right? I'm going to teach you guys how to build your retirement portfolio in 5 minutes following what I like to call the Burger King investment strategy, right? So McDonald's spends a lot of money every year deciding where they want to put their next location. McDonald's is also in the real estate business, so they want to make sure they're buying at a great location, right? So they put a lot of research and a lot of effort on doing so. Burger King, however, spends little to no money deciding where they want to put the next Burger King. What do? They just put it somewhere near the next McDonald's. Why? Because Burger King understands this. It's okay to be a copycat as long as you copy the right cat. It's okay to be a copycat as long as you copy the right cat. Burger King understands that as long as I am in proximity to this fast food restaurant, I'm probably going to still win by default. That drive-through line is going to be really long one day, and someone wants to get that Big Mac with the special sauce. but they're not going to have a lot of time, so they're going to come across the street and get the Flame Royal Whopper. One morning, somebody's really going to want that McGriddle or those hot cakes. Now, disclaimer, I haven't had McDonald's in 10 years. I don't know if they serve either one of those things anymore. But when they did, I ain't gonna lie, they used to slap, and the fish fillet, right? But somebody might be really busy. They want that those hot cakes or that McGriddle, but the drive through line is too long, so they go across the street to Burger King and get the French toast sticks, right? So just by being in the right place at the right time and copying the right cat, they win. So somebody write this down. It's okay to be a copycat. You just got to copy the right cat, right? It's okay to be a copycat. You just have to copy the right cat. All right. So there are these investment vehicles called ETFs, exchange traded funds. And the way I like to explain what they are is kind of like your favorite mall. Your favorite mall has hundreds, sometimes maybe even thousands of stores in, especially if you go to like a big, really big international mall. Now, if any one or five or even 10 of those stores aren't doing well inside of the mall, do we think that the entire mall is going to not do well or underperform? Absolutely not. We understand the mall is still going to be fine, even if a handful of stores aren't doing well, right? So when you invest in an ETF, it is essentially like buying the entire mall, right? Instead of figuring out what's the best store, you just buy the whole mall, right? Instead of figuring out what is the best stock, you just buy all of them, right? And so what we're looking at is Vanguard Total International Stock ETF, okay? And all you have to do is click the buy button. Now, here's the thing. A few minutes ago, I mentioned copying the right cat. So Vanguard, right, spends tens of millions of dollars a year on research, on portfolio managers, on analysts, on all the things, right? Because Vanguard manages trillions of dollars in assets. They can afford to do so. But guess what? All you got to do for a small fee of 0.05%, right, is click the buy button and you get to own it too. Now, here's why that's interesting. You don't have to be a world-class expert. You don't have to be a financial advisor, wealth manager. You can just click the buy button and your money year to date, year just started, will be up 11.61%. Now, that's interesting because many of the financial gurus tell you to settle for 7% for the entire year. It's March 1st. Your money will be up 11% just off this one ETF alone. But yet we're looking at the headlines and the volatility in the stock market. And again, past performance does not indicate future outcome. I'm not saying that this ETF is always going to perform at this level. I'm not saying that you'll always do better than this. All I'm saying is don't just take what you hear at face value. Okay. So now if you just did this, if you just would have met George this time last year, right? Bought this ETF, your money would be up. Let's see what it is year to date. 35.18%. That was the 1 year return. 35.18%. Right? And that's if you all you did was click the buy button one time, never opened your laptop again after you bought it in January of last year. Right? I don't think anybody's mad at those returns. And here's the thing. I'd love to stop there. You probably would do better than most people if I just stopped there. But I am a wealth manager and I have clients that pay me money to manage their wealth. So I don't get the luxury of just telling my clients, hey, just click the buy button. They say, George, that's great. I'm happy. But like, you're giving that information away in a free class. So why am I paying you? Is it okay if I share with y'all like how I help my clients outperform the market or outperform these underlying ETFs? Would that be okay with y'all? Now, don't tell my clients now because they pay me a lot of money. Okay. But I'm going to tell y'all today because I want y'all to get this information. So as I mentioned, inside of these ETFs, they have hundreds, sometimes thousands of different investments. And this particular one, as you can see, it has north of 8,600 different investments inside of this one ETF. And all you had to do is click the buy button and you'd be up 11% year to date, right? You wouldn't have to sift through all of these different pages to figure out which ones are you going to invest in. Just click the buy button and call it a day, right? But again, I'm a wealth manager, so I can't settle for that. So what I figured out, and here's what you can do in the event that you never hire a financial advisor, but you want to know, kind of my philosophy or at least a part of it. Well, here's what you can do. You can go over to Claude or Chat GPT and say, hey, what are the top 10 performing holdings inside of VXUS? And which ones do you believe will continue to perform well for the foreseeable future? Think like a chartered financial analyst or think like a certified financial planner. Now, ChatGPT cannot give you financial advice. You still need to do your own research, but it will give you a baseline, right? And so instead of you having to sift through 8,000 different investments, you can get the top 10, right? And let's just say you do your research on it, and of the top 10, there's five that you really like. So now what this means is when I get ready to invest, every time I invest 10,000 or 50,000 or 100,000 or whatever amount of money I can afford to invest, 70% of my money, I'm going to buy the whole mall. I'm going to buy the ETF, the total international stock ETF in this example. Not saying you should buy that. I'm just saying in this example. Now, with 30% of my money, I'm going to take those five companies I feel really good at. I mean, really feel really good about, and I'm going to invest in those companies. Why? Because those companies are likely outperforming what this ETF is doing, right? Think about it like a basketball team. If an all-star team, right? You have your all-star players, but then you have some players who just play a role, right? They're gonna come off the bench, give you some points. Some days they're gonna win, some days they're gonna be okay. Then you have your all-stars. So the benefit of this strategy is you get to own the whole mall, right? You get to own Apple inside of the mall, but you also get to own Apple as a standalone store. So if that standalone store does really, really well, right? You get the benefit from that. Because the only downside of owning a company that does really, really well inside of an ETF is you're only going to benefit from the upside relative to the percentage ownership inside of the ETF, right? But at the same token, we don't know if those individual companies are going to do well. So we get the upside, the potential upside of the companies we believe will do well, but we get the downside protection by diversifying our portfolio because 70% of our investments are in that core portion of this ETF. Does that make sense? Okay, cool. And now you know more than most of the investment gurus online. You're welcome. So what you're looking at here is a chart that shows my portfolio, which is that purple line up top, in comparison to some of those popular ETFs and indexes, right? VOO, which is the S&P 500, basically Vanguard's version of it. BRK, which is Warren Buffett's investment fund. SPY, which is another variation of the S&P 500, QQQ, which is a tech-heavy index, and then the NASDAQ 100, right? All names you've probably heard of. But why is it that my portfolio has been able to consistently outperform them? Well, guess what? I just showed you, and now you know how to do it too. So this is one of my portfolio allocations. I looked at what it did from October of 2024 to October of 2025. And we can see that it was up 58%. Now, you can Google what the total stock market did over that same period of time, and you can tell me which one you like better. I looked at that same portfolio over a 3-year time horizon from October of 2022 to October 2025, and you can see the same portfolio was up 368%, right? Past performance does not indicate future outcome. I am a licensed financial advisor. Do your own research. Okay. Now, how can you invest the same dollar 3 different ways, what I affectionately like to call the triple dip strategy? This is where you guys really want to you really want to pay attention. I'm about to wrap it up here, but here's where I want you guys to really pay attention. If you have not paid attention yet, this is where I want you guys to really pay attention and take notes. So there is a difference between debt and leverage. Most people don't like debt because typically what happens is you're borrowing money to pay for something that you couldn't afford to pay for in cash. And by the time you pay it off, you pay back more in interest than you originally borrowed, right? You finance a car for $25,000 for 5 years, you end up paying back $31,000, right? Now, leverage is a little bit different. You're still using borrowed money, but the difference is you're not buying a liability, you're buying an asset. And you expect that the profits that you make from that investment to be greater than the interest that you owe on the money that you borrow. Right? So take that same $25,000, $30,000 and you used it for an investment, right? But then you have to pay back the interest. You believe that the rate of return that you're going to get is greater than the interest that you owe. And as a result of that, you can pay back the loan and still keep the profit. And that's something that I would do every day of the week and twice on Sunday when it's done the right way. And so many people don't know that you can do this with your investments. So imagine you had an investment portfolio with $30,000 in it, right? and you said, you know what? I want to invest in something else. So I'm going to borrow $15,000 from my investment portfolio, which means I have $15,000 remaining. And then I have another $15,000 that I can invest elsewhere. I'll have to pay interest on the 15,000 that I borrowed. I didn't have to sell my investments. I just borrowed and I can pay myself back when I want to, right? And then I'm going to invest that $15,000 elsewhere. Now, that's great because you were able to take your original money and then have two different ways that it can be invested. But what I like a little bit better than that when you have the opportunity to do so is that you can actually leverage your investment as collateral. What does that mean? It means you can go to that same investment institution and you can say, hey, I have $30,000 invested. Will you give me a separate line of credit for 50% of my portfolio value for $15,000? So that means I get to keep my 30,000 invested. It doesn't go down to 15. I get a separate line of credit for $15,000. And why will they give that to me? Because they can clearly see that I have $30,000 invested at their institution. If for some reason I decide I don't want to pay them back, they know that I can sell some of those investments and pay them back, right? So they'll happily give you another $15,000 line of credit, right, with some interest. Because here's the thing, they're banking on you taking that $15,000 and going to buy liabilities. And then you just now being in debt and paying them back interest, right, forever. That's what they're banking on. They didn't know that you were going to come to the Multiply Your Money class on Sunday and show them how to flip the game upside down. And you can leverage their money to make you more money. They didn't know that you were going to learn that. And the beautiful part about this strategy is there's no credit check required. There's no application. This is how you become your own bank. This is how you become your own bank, right? So a couple years ago, I knew I wanted to buy some more real estate, and I had three choices. Number one, I could take the money from my bank account. So whatever money I needed for a down payment and whatever money I had saved, my bank account balance would immediately go down by that dollar amount, right? It's gone, right? Option two, I could sell some of my investments that were performing really well. But I'm gonna show you in a couple minutes why that doesn't make sense. Option three, I could do what I just shared with you and I could borrow against the value of my portfolio, meaning my money stays invested and I get a line of credit from my investment institution based upon the collateral that I have inside my investment account, right? Cool. So in this example, I wanted to get access to 132,000. Is going to cost me about $824 a month. And at the time, the interest rate was 7.25%. It's actually lower now, but at the time it was 7.25%. Now, here's why I did not care about a 7.25% interest rate, why I did not care about $824 a month repayment. Here's why I did not care. Can I show you why I didn't care? So this is the investment account in which I borrowed against the value of. So at the time, this account was up 65.83% year to date. My money had made me over $162,000. So you tell me, if you have an investment account that's making 65% year to date, but you can borrow against your account for 7.25%. It doesn't take a mathematician or investment expert to see which option makes more sense. Sell my investments and disrupt this level of growth, or borrow against my investments and let my money keep compounding. Which one makes more sense, right? We obviously know the answer to that. So I did the math and I saw that, okay, well, I'm going to borrow against my portfolio, use that money to buy real estate property, let my money keep growing. Now, you might be asking yourself, well, George, what does that have to do with a Tesla? Well, at the same time, I was considering buying a Tesla. Now, I ended up buying a different car, but me, I was just curious because I knew that I was invested in Tesla. And I said, how much has my Tesla stock grown to? And I saw that my Tesla shares grew to over $57,000. I was like, wait, you mean to tell me that my Tesla shares can buy me a Tesla? But I've never met Elon Musk. I never stepped foot in the factory. I'm not on payroll for Tesla, but my money that I invested in Tesla could buy me a Tesla? You mean to tell me that all those packages that get dropped off at my doorstep every week from Amazon, if I just invest in Amazon, they could pay for those packages? Well, you mean to tell me that all those iPhone upgrades I've done every single year, if I would have just invested in Apple, Apple ultimately could have paid for those upgrades? Is that what you're telling me? Because here's the thing, in school, many of us learn the order of operations. PEMDAS, please excuse my dear Aunt Sally. right? Parentheses, exponents, multiplication, division, addition, subtraction. But we did not learn the order of operations that says when I go work and make active income, I need to take some of that active income and invest it so I can turn it into passive income, which means my money can work for me so I don't have to keep working. Wouldn't it be nice if they taught us that in school? How much further will we be if we learned that in high school or college at the very least? And this is what we call the power of uninterrupted interest, where we invest money in assets that we own, we borrow against those assets, and then we use that money to buy cash flow producing assets to create income and supercharge our wealth building. This is the real estate property that I bought when I borrowed against the value of my portfolio. But if you remember, my first payment was due in June. Why did I set it up that way? Because I borrowed the money in the same month that I knew that I was going to close, and I knew that it wasn't going to take me any time to borrow the money because I was the bank. I didn't have to go through the bank. I was the bank, right? I was able to get access to that money instantaneously, use the money for this rental property, and the cash flow minus any outstanding mortgage or any other liabilities was significantly greater than the money that I had to pay back, including the interest that I owed on the money I borrowed in the first place. So let me just explain to you as I wrap up how this works. I call this the financial freedom flywheel. Step one, invest into the stock market following the strategy that I taught you today. Step two, borrow against the value of your portfolio so that then in step three, you can purchase those cash flow producing assets. And then in step four, you can reinvest that cash flow and rinse and repeat this strategy until you become financially free. And because your money is working for you in three different ways, that is the reason why you're able to get there three times faster. So, in the example of you buying the real estate property, the good news is you now have passive income and you now have a real estate property, right? Normally, the bad news would be, well, I probably got to pay some taxes on that property. But because we now understand the tax code and they will incentivize me, right, for owning that real estate, and there are things I can do to depreciate that asset, even though I still receive the income, right? I can own that asset but pay minimal to no taxes depending upon how I set it up. My personal favorite is that I borrowed the money in the first place to buy that real estate property against the value of my portfolio. But the IRS does not recognize loans as income. So I borrowed against the value of my portfolio, didn't pay any taxes. I used that borrowed money to buy real estate, used tax strategy to avoid or minimize the tax I paid on the real estate, got cash flow from that property, reinvested that cash flow to make my money multiply even more, and I still didn't have to pay any taxes. And on top of that, the IRS will allow me to deduct the interest that I paid on the loan that I got in the first place. Rich people do the right things. They become valuable people to the marketplace so that they can get paid good money. But wealthy people own the right things because wealthy people understand this, that riches is measured in money, but wealth is measured in time. Wealthy people want to do what they want, when they want, with who they want, for however long they want to do it. And I actually believe that that is my time for today.
Come on, man. Come on, man. Hey, do me a favor, y'all. Drop wealth in the chat if my brother just gave y'all some wealth strategies. As a matter of fact, remember how at the beginning of class, I told y'all this wasn't going to be one of those classes that we act like we're going to teach y'all something? Like, have we kept our promise? Did y'all actually learn something in tonight's master? I just want to make sure we're man of our words. We told y'all was actually learn something tonight, and I want to make sure we kept our promise. And actually, somebody put this in the chat. Let me know if y'all can relate. They were like, man, I wish I had this information 5 years ago. Like how many of y'all can relate to that? How many of y'all wish I had the information 5 years ago, 10 years ago, 15? Like, think about it. How much different would your life look today if you had access to this information 15 years ago? And here's the thing, we're not gonna lie to y'all, family. The best time to get this information, it was 15 years ago. But the next best time to get this information is right now. Now stands for no opportunity wasted, right? And some of us, if we're truly being honest with ourselves, some of us, we already feel like we're behind when it comes to our retirement goals. We already feel like we're behind. We literally can't afford to waste any more time. right? So here's my question to everybody in the room. Based off what you learned tonight, who in here is serious about learning more so that they can start earning more? Just drop me in the chat. Who in here is serious about learning more so that they can start earning more? Right? I see you, Norm. I see you, Kyle. I see you, Robin. Okay, amazing. Because me, as you all know, me and George love teaching this class, and we're thinking to ourselves, if we can teach people this much in an hour, how much could we teach them if we gave them the opportunity to spend some more time with us, right? So I asked George the other day, I said, bro, how much time would you need to go over the advanced investing strategies? I know tonight we went over the basics, but how much time would you need to go over the advanced investing strategies? I mean, like some of the same strategies that we use with our clients that help them increase their net worths by millions of dollars.
Yeah. So if I'm going to show you guys the strategies on how you can truly become your own bank, right? I know a lot of people are interested in become your own bank. Like, what does that even mean? I'm gonna have to dive into that a little bit. But then most importantly, showing you how you can unlock the power of your retirement accounts today, tax and penalty free. Because many people think that once the money's in a retirement account, can't touch it until age 59 and a half, or I'll be taxed and penalized, which is not true if you understand the rules of the game. And then using that money or other sources of capital to buy a business that you can own but do not run or invest in other cash flow producing assets probably would need two, maybe 2.5 days to get through those topics. But there's one small catch. Today, you taught the first 30 minutes, I taught the second 30 minutes, and that's cool. I think that format's fine. But personally, I'm more of a crock pot kind of guy. I'm not an air fryer kind of guy. Like matter of fact, my air fryer is fried. I need to get a new one. So I like things to slow cook, right? So for me, I would prefer to have the whole day, right? When I teach, if I can have the full hour. Now, granted, you can have your own time. I just would
Yeah.
prefer to get that time to unpack these subjects a little bit more because I know it's a lot of meat on the bone. If I could do that, I think 2.5 days would be sufficient for me.
Okay. Well, what I'm not gonna do, I'm not gonna let you out teach me in front of all these people. So if you go teach those strategies, I'll probably teach them how they can use the Augusta rule to get tax-free rental income by renting their primary residence out to their business. I'll probably also teach them how they can use a private family foundation structure to get a six-figure deduction for donating to their own charity. And I probably should also teach them how they can use real estate plus a cost seg study to wipe out all of their W-2 or small business income from being taxable. And if I'm gonna dive deep on those strategies, I'll probably need 2, maybe even 3 days to really dive deep on these strategies. So, guys, this is what me and George decided to do. We decided to create an opportunity where y'all can spend not just one day with us like tonight, not just 2 days with us, because that's not enough time, not just three, not just four, but we created an opportunity where y'all can spend 5 days with us virtually. So we can give you the step-by-step blueprint to building tax-free wealth and reaching financial freedom faster. And we're calling it our 5-day wealth workshop. This is going to be a virtual training from March 30th to April 3rd from 6 p.m. to 8 p.m. Eastern. And during this training, we're going to be condensing decades into days. And this is exactly what you're going to be learning. So, day one, we're going to teach you all how to set up your LLC, S Corps, holding companies, parent companies, so you can have the right structure, not just for tax savings, but you can have the right structure for asset protection. Right. Day two, I'm going to be teaching you all how to pay your children tax free and how to leverage a trust structure so you can pass down your assets to your children tax free as well. Day three, George is going to be going over advanced investing strategies. Day four, I'm going to be teaching you all the real estate strategies, how you can use the real estate plus a cost seg study to completely wipe out your income from being taxable. And last but not least, day five, George is teaching you all how to unlock your retirement savings today, tax free and penalty free, so you can leverage that money and grow it faster. So you can reach retirement faster. Now, based off this curriculum, like, let me know in the chat who knows they need to be in this room. Like I see you, Rachel. Like, who knows they need to be in this room? Kim, Sylvia. Okay, great. So y'all are as excited as we are because we're super excited. But then we were like, wait a second, wait a second. If we teach people this many strategies in a week, they're probably gonna have some questions. Like, honestly, how many of y'all had questions about the free information that we just gave? Right? Like, so we figured y'all might have some questions. And so we thought to ourselves, like, how valuable would it be if, on top of the 5 days of education, how valuable would it be if we gave you all the opportunity to ask us your questions? Like, how valuable would it be to ask your specific tax or your specific investing questions to us to get specific answers based on your situation? Well, that's exactly what we decided to do. So on top of the 5 days of training, you all get daily Q&A with both me and George. So you can get your specific tax or specific investing questions answered. And just so you all know how valuable this is, or at least how valuable we think this is, like we don't do it anymore. But when we did do like one-on-one consultations, we were charging $2,000 an hour for our time. Like just earlier last year, this lady paid us $2,000 an hour for a consultation. And y'all getting 5 hours. So that's $10,000 worth of consulting time y'all are getting as a bonus because we understand the level of access that you all need to get the transformation that we know you all deserve. So you're going to get 5 days of education with us plus Q&A, which we think it makes it a great opportunity. But we said, how can we take it from a great opportunity to a no-brainer opportunity? So we said, well, how valuable would it be if we had our team of CPAs and financial advisors create anybody who grabs their ticket, give them a personalized tax and financial analysis so they can know which of the strategies that we're teaching that they need to be focused on based on their income level. So we're going to have our team of financial advisors and CPAs create you a high-level tax and financial analysis so you know which of these strategies you need to focus on based on your income, right? And so again, just so y'all know how valuable this is, we literally have charged clients $5,000 for the same analysis. But since we're doing this training and we want this training to be revolutionary, we decided that we're going to add this in as a bonus for anybody who grabs their ticket tonight. So we think this is now a no-brainer opportunity, but here's the last thing we thought about. We're like, what about the people in different time zones? Some of y'all in PST time. So we are going to give you all temporary access to the recordings. So if you happen to be late for a day or you happen to miss a day, you get to rewatch that training. But we strongly encourage you all to show up there live because that is how you get your questions answered and that is how you get the most out of this training. Okay, so as a recap, here's everything that you're going to get if you take advantage of the opportunity tonight. You'll get 5 days of advanced strategies with me and George, daily Q&A with me and George, a personalized tax and financial analysis, and temporary access to the recordings. This is $25,000 worth of actual, truly paid for value that we're including in this training. So now the question that everybody in the room has is, what is the investment required to join? And we let some of you all know at the beginning, but those of you all who weren't there, we'll tell you right now. You're going to get everything that we just talked about, plus these bonuses for the low price of $2,000. That's it. And they're like, we think this is beyond reasonable because, like, if all this did was help you save $20,000 in taxes, how much is that worth to you? If all this did was give you the strategies to increase your investments by $25,000, how much is that worth to you? Or better yet, if all this did was help you retire 5 years sooner, how much is getting 5 years of your life back worth to you? Right? So we think this $2,000 is beyond reasonable. But because you all have stayed in class and because you all have been here for the last 90 minutes with us, is it okay if we bless a few people tonight for y'all's time? There's our blessings in the chat. It's okay if we bless a few of you all tonight. Okay, cool. So tonight we decided to do a fast action bonus. What does that mean? That means that the first 50 people that take action tonight, you are not going to have to pay the $2,000 sticker price required to join us for this 5-day training. But what if we also told you that the first 50 people that take action tonight are not going to have to pay $1,500 to join us for this 5-day transformational training? Susan, but what if I also told you that the first 50 people that take action tonight are not going to have to pay $1,000 to join us for this 5-day transformational training? Okay, so this is what we're going to do, y'all. For the first 50 people tonight, that take action and grab their ticket, you're going to get everything that we just talked about, plus all of the bonuses for the low price of $397. I know that's crazy, right? That's crazy. So here's the thing, though. Here's the thing. We have over 600 people in this room right now. So this is only for the first 50. So if you're serious about making 2026 the best financial year of your life, if you're serious about learning how to legally shelter your money from taxes, if you're serious about reaching financial freedom faster, then my team is going to pause the chat and my team is going to drop the link. So the link is now in the chat. Once these 50 spots are gone, the price will go up to $997, then it will go up back up to $2,000. So if you want to be part of this first 50, the link is in the chat. You can secure your spot right now because now stands for no opportunity wasted. I'm so excited we decided to do this price drop, bro. They going crazy in the chat right now.
Yeah, I'm super excited, man, because many people might be wondering or curious, like, well, why would y'all even do this? This is insane. I've spent much more on a course and I never even had access to the source. You mean to tell me for 5 days, y'all are going to show up live in the flesh and I get to ask y'all questions every single day? What's the catch? So, personally, I just want to spend a few minutes giving you guys the reason why we even decide to do this. So, we are on a mission to decrease the wealth gap by $100 billion. In the last 12 months, our clients improved their collective net worth by over $244 million. That's a pretty big number, right? But 100 billion is a really huge number. So we did the math. We said, okay, 100, in order to close the wealth gap by 100 billion, that means on average, we need to help 100,000 people achieve their first or next 1 million in net worth, right? And so even though we have an investment advisory and tax advisory firm, there's no world where we're ever going to work with 100,000 people one-on-one. So we said, we got two choices. Either we can shrink the mission, right? We'll still be helping people improve their net worth by hundreds of millions of dollars of every year, but 100 billion is maybe just a little bit far out of reach. Or we could create an opportunity where we could still educate, coach, teach the same strategies that are helping our clients achieve these wealth building numbers. And so what we did is we did a case study on our top clients who got the best results and looked at the strategies that they used the most in order to get the results that they had. And we said, oh, wait, what if we took this information, packaged it into a virtual training so that we could teach as many people as possible what we are advising on for our actual clients? And that is why we decided to create this 5-day wealth workshop, right? And we knew that we had to do it in a way where you guys could ask questions. Because how many of y'all got questions after today? And this is just a free class. You know you're going to have questions after 5 days of live training. So we knew that if we set it up this way, we would be able to serve as many people as possible. And here's kind of a happy accident that we didn't expect. So typically when we do these virtual workshops, we try to align it with when we are opening our doors to serve new clients, right? Now, granted, there's always going to be a limited number on how the amount of people we can serve, but we try to align it at that time. Why? Because what we learned in this process is that anytime somebody became a client that came to our virtual summit or workshop, I should say, they actually were more educated, more empowered, and they moved through the process even faster and got even better results than the clients that we did a case study on. So for us, it became the new prerequisite. It's like, you mean to tell me when someone is educated and empowered, we can get them better results and we still can make good on our mission by teaching the difference of the people who maybe isn't ready to hire a money team right now? So now this became the new prerequisite. And so that's why we decided to do this, guys. It gives us the best of both worlds where we can help as many people as possible while also educating the next group of people who will potentially become our clients. So that's why we do it. Carter, and I think, if I'm not mistaken, we have some testimonials from the last time we did one of these workshops, just so people can kind of hear it from them. And doesn't have to take my word for it.
Yeah. So guys, we did the same training around this time last year. And some clients that are people that are now clients, they took us up on this training, and this is what they had to say about their experience with our 5-day wealth workshop.
Best money I have spent all year, hands down. This course, this experience, because it's more than a course, paid for itself. Honestly, it paid for itself after the first night. We got so much more than what we paid for. The information that these two men give away basically for free. I know there's a cost associated with this 5 day challenge, but you get so much more than what you paid for. It's so great that I decided to join the family for 12 months. 1 year of being coached and guided towards my dreams. George and Carter were generous with their time. They were generous with their wealth of knowledge on taxes and investing. But for me, most of all, they were generous with their hearts. All the things that George and Carter and Dion and folks have taught us, I'm going to put to use. In fact, I'll put them to use right now. I am here on this trip with points I earned via step 5 in Carter and George's system. So if you do it, it works. And if you work it, it'll work for you. I realized that it was truly a revolutionary financial knowledge depositing experience. You can have all of this and more if you take advantage of the Multiply Your Money Challenge. These two guys have got it going on. They are empowering, they're amazing, they have a great team that's been put together. Invest in yourself. It's an incredible knowledge base, and you won't be sorry. Take this course. I will be more than ready when the opportunity arises again to closely work with you guys and realize my goal of 5.8 million in that point. This class will certainly get me there. The biggest takeaway that I got from you guys was build your own bank. Something I've been wanting to do for the past 10 years. I just didn't know how to do it. Sincerely think that you'll be glad that you joined the Multiply Your Money Challenge and went with the VIP experience. My whole financial future has changed because I took this challenge. Thanks. The Melvin Challenge, join it. Don't hesitate. This is one of the best investments you can make in your life for you and your family and future generations. This is some generational wealth transformation that they about to give you. The game that you think you know, or you thought you knew, is nothing to compare to what you're about to learn.
Okay, guys, so that was just some of the testimonies that we had people give us from this 5 day training. As y'all see these screenshots of people saying it was the biggest financial transformation event they've ever attended. Our team just let us know we have 3 spots left at the $397 price point. So tickets are going faster than we anticipated. So like some of you all are asking like, okay, the testimonials sound great. People are getting like mental transformation, but what actual financial results have people gotten from taking this training? Some of y'all are analytical like me, right? So what's the financial result? So I'm glad you all asked. So as George mentioned, we actually open our firm doors after the workshop for clients that want to hire us. So one of our now clients, he took the workshop and he was able to get a $38,000 tax refund by implementing some of the same strategies that we teach during this 5 day training. One of the main strategies I want each of you all to understand is, did you all know that the IRS allows you to go up to 3 years in the past and file what's called an amended return and add back the tax deductions that you missed out on? Right? How many of y'all in the chat know that you missed out on deductions last year based on this based on this on this free class, right? So this client realized his previous CPA left tens of thousands of dollars on the table. So then at the end of the training, he hired us so we could file an amended tax return for him and add back those deductions he missed. And he was able to get a $38,000 tax refund, right? And so here's what I want you all to realize. The IRS will never come knock on your door and say, hey, Don, you overpaid us in taxes. They will never come knock on your door and tell you that you overpay taxes. It is up to you to plant yourself in the right rooms to get the right information that can then change your situation. It is up to you to understand the tax code and how it applies to you so you don't overpay taxes. So this is one of the strategies our client got, and he got a $38,000 tax refund from being able to implement some of the strategies in the training. Now, George, this is just a tax testimonial, but George, I want you to go over this investing testimonial.
Yeah, so I remember I got a text from one of our clients, and the one that caught my eye was the one where she said she was crying, because I don't think anybody wants a client that's crying. That can't be good news, right? But it was actually tears of joy. She had logged into one of the investment accounts that we set up on her behalf, and she saw that her money, or that she was up $33,000, and she was confused. She said, "Hey, I hadn't made an additional deposit since we set it up. Is this accurate? It's saying that I'm up $33,000." I was like, "Well, yeah, that's kind of how this investing thing works, right? Your money makes you money." And so she was just couldn't believe it. She was floored. She's like, "Wait, I've been out working and building my business and working hard. You mean to tell me that the money I put in this account a few months ago, that the money made me $33,000?" And the reason why she was so ecstatic is because she has well, now she has 5 kids, and she just saw the light at the end of the tunnel, that she will finally put herself in a position where her money can work harder than her, so she can spend her time with her beautiful family. And so now our inside joke is that you have over a $5 million net worth, and you have 5 kids. So you have $1 million net worth for every single one of those beautiful kids. And what's so interesting is that before she hired us, she didn't even think that she was ready to hire a financial advisor. She said, "I don't know. No one in my family has ever done anything like that. Maybe I'm not ready." But what she was really saying is she didn't know if she was worthy of wealth, right? And now we all know that she absolutely was. Drop worthy in the chat if you know that you're worthy of wealth.
Yeah, no, I love that story. And while y'all putting worthy in the chat, I want y'all to think about this because she has kids, right? And I don't know about y'all, but generational wealth is really important to me. So just drop GW in the chat if generational wealth is important to anybody else in this room. So drop GW in the chat as, if generational wealth is important to you. If especially like if you're doing this training not just to get your own finances in order and get your own investments in order, but you want to make sure your kids are further ahead of you when they get your age, right? And so, if generational wealth is important to you, I want to give you this lesson that one of my early mentors gave me, and it changed my life. He asked me, he said, "Carter, is generational wealth important to you?" I said, "Absolutely." He said, "Let me teach you this lesson." He said, "You cannot teach what you do not know, and you cannot lead where you did not go." And he said, "So, how are you going to teach your family the generational wealth strategies when you haven't learned them yet?" He said, "How are you going to lead your family to this place called financial freedom when you haven't gotten there yet?" He said, "It starts with you." And it hit me like a ton of bricks. And so I'm gonna
Hmm.
take the same lesson that was taught to me, and I'm gonna give it to everybody in this room. Everybody that just said generational wealth is important to you, how are you gonna teach strategies when you haven't learned them yet? How are you gonna help your family get to financial freedom when you haven't gotten there yet? It starts with you. So this is an opportunity to condense decades of financial experience from two experts, a tax expert and an investing expert. You can condense decades of financial experience into days so that you can have the wealth strategies to teach your family, so that you can get to financial freedom faster, so you can guide your family. But it starts with you. And if you don't put yourself in these rooms to get this information, then you will never be able to change your situation, and you definitely won't be able to change their situation. And that's why we're so passionate about teaching this.
Absolutely, guys. And the truth of the matter is, one of the things we realized is, have you ever seen those videos where it's like it's a candle, and then like you take the one candle, or the match, and you light the other one and the other one, and they all get lit up, and then the original match is still lit, right? We realized that just because we choose to take this information and share it as far and as wide as humanly possible, it's not going to take anything away from us, right? We want everybody who can get access to this information to get access to it. Me and Carter are not, we're not lifeguards, right? We're lighthouses, right? We're not here to save anybody. We're here to show everybody in this room that you are fully capable of saving yourself. You're fully capable of being that legend for your legacy, right? You may have not come from a rich family, but I got great news for you. A rich family can absolutely come from you. And just one other thing I wanted to share too is, some of y'all might look at the date, might say, "Man, 5 days, like I'm gonna catch the next one, right? Something's going on. Maybe I'm not gonna be available. Maybe you're too busy." But I'm gonna hold your hand when I say this virtually, right? Don't be too busy to get rich. Don't be too busy to build wealth, right? If you're in this room, more than likely, you are the person that either is or is going to have to be that one for your family. You're already doing well financially, right? But now you're just trying to figure out how to put the puzzle pieces together. You're tired of overpaying in taxes. You're tired of being told that there's nothing else you can do as a W-2 working professional, and it is what it is. If you're an entrepreneur, you're tired of being told I got to buy the second or third G Wagon, right? You're like, there's got to be better strategies. You're being tired of told that just invest your money in the ETF and that's all you can do and wait 30 years. Carl, that meme you sent me was
Oh
hilarious, by
yeah,
the way.
yeah.
Yeah, like you're tired of it, right? It's like
Mm.
some of y'all like, and I don't say this arrogantly, but let me know in this chat for any of y'all who are working with a financial advisor or CPA that y'all learned some things in this class that they haven't shared with you, right? Let me know if y'all, and this is just the free class,
Mm.
right? And that should tell you something. So at the very least, maybe I should get a second opinion. Maybe I like the man or woman I'm working with. Maybe over the next 5 days, I go back to them and say, hey, these professionals, they're not talking heads online. They own a tax and wealth advisory firm. They're helping their clients do this stuff. Is there any reason why we can't do these things, right? And one or two things are going to happen. Either one, they're going to still give you the same excuses, or two, you're going to say, you know what, maybe I should just hire those guys.
Mhm.
Right. But either way, we want to empower you with the information so that you can make those informed decisions on what is really possible when it comes to saving more money in taxes, taking that money and investing it so you can build wealth 3 times faster than traditional financial advice.
Yeah, and I see people in the chat. Well, can we just hire y'all? Can we just hire y'all? And again, we truly see that our best clients are clients that go through this workshop first, because we know an educated client is a better client. So let us show you we can help you by first actually helping you. And then at the end of the training, if it makes sense to hire us after that, you have that choice. But like we believe in greatness on display. Let us show you what's possible first. And then if it's aligned and you want to work together, we can. But like this is what we found the best clients go through first. Now let me ask this question. Drop all in if you grabbed your ticket already. Just drop all in so I can see all the people that took action, all the people that's gonna be joining us for this wealth workshop in a few weeks. I see you, Leonard. I see you, Lori. I see you, Kim. I see you, Nicholas, Rhonda, Cameron. Hey team, quickly, have we sold out of those 50 spots yet?
Hi, Carter. Yes, I'm just about to ask you because we've been receiving emails and text messages that they wanted to still secure spot. So they're asking a favor if you can give them a chance to sign up for $397 pricing,
So
if
we
that's
we
possible.
we ran out of the 50 spots, so the price is supposed to go up to 997, right?
Yes, sir.
Okay. Well, I mean, those people were late, so I think it has to go up to 990. Like, was it our fault or was it a website issue or were they just late?
No, no, no. We just sold out. Not our fault.
What you think, George? Should we have it go to the 987 price or should we give a few more people the opportunity?
So it wasn't our fault. We just sold out. Um, okay. Here's what I'll say. It's 7:43 CST. So for the next 7 minutes before it's 8 o'clock, we'll let those people grab a ticket if they grab a ticket within the next 7 minutes. I think that's fair. Or we can put a cap on it. Or we can say 7 people.
I
Whatever
say
you think.
let's do 7 minutes because I want to do something. I was gonna wait till we sold out to do this, but like since it's 7 people, I think it'd actually be funner to do it for the last 7 minutes. So
Okay.
so so team, make sure we delete this out of the recording because this is only for the people in the room. And we got some more surprises for y'all because we want the people to take action and then surprise them with some extras. So we go do a few more bonuses. Now, these bonuses will be live for the next 7 minutes, or they also will go to the people that bought before. So either people that buy in the next 7 minutes or the people that already bought. The link is in the chat, by the way. So I'm a firm believer that a lot of you all have bought something from previous people and they didn't keep their end of the bargain. They bought something, they promised you a result, and they didn't keep their end of the bargain. And it slighted some of you all from ever wanting to trust a conference, whether it was a virtual conference or whatever. It slighted y'all from wanting to give it another opportunity, give it another try. And I want to let you all know one of the greatest lessons that I've learned, and it's the only thing worse than making a bad decision in the past is letting that bad decision in the past stop you from making a good decision in the future, because then it burns you twice, right? So for those of you all that have bought a conference ticket or a virtual training and somebody didn't keep their end of the bargain, I want to do something for you that will free you tonight. Okay. So anybody that grabs their ticket tonight, you are going to get our 2x money back guarantee. What does that mean? That means that if you sign up and show up after 5 days, if you don't feel like you've gotten twice your investment, so if you bought a $400 ticket and you don't feel like you got $800 worth of value, we will refund you your money, no questions asked, right? So all you gotta do is sign up and show up. And if you don't feel like you got two times your money worth, we'll refund you, no question asked. So the way I look at it is worst case scenario, you buy a ticket, you attend, you didn't get the training or the strategy you expected, you get to get your money back and you get to keep the strategies. Or best case scenario, you get end up like this client who was able to hire us after the training and get a $77,000 tax refund by implementing the same strategy that I mentioned earlier. Or you could be like this client who literally texted one of our financial advisors and said their money made them more money in the last 12 months than they did working. Like imagine a world where at the end of 2026, your money ends up making you more money than you did working at your job or working in your business, right? That is the type of net worth. That's the type of results you should be getting if you get the right strategies. So, anybody that grabs these tickets tonight, you're gonna get that 2x money back guarantee, and then we have 4 minutes. And George, I'll let you talk about this extra bonus that you wanted to add for these last 4 minutes.
Yeah, absolutely, guys. So, this is going to be an amazing virtual event where you guys are going to connect with amazing people who are all in the same journey as you, looking to build wealth, right? But me and Carter actually met at an in-person event before COVID, before these virtual events were ever possible. And so every year we do a big event in the summer called Wealth Weekend. And I said, wouldn't it be cool if we incentivize the people who made a decision to tap in with us for the virtual event and say, you know what? For trusting us for this virtual event, we're going to give you a complimentary general admission ticket to our in-person event this summer, Wealth Weekend 2026, right? And so this is some of the folks we had last year. We had Terrence J, who hosted our award show. We had Morgan DeBon, who was one of our keynote speakers. Pinky Cole, who's the founder of Slutty Vegan, which is valued at over $100 million, and plenty more amazing speakers. And you guys get a chance to get in that room and now borrow our trust, right? Say, oh, you guys attended the workshop. You're at Wealth Weekend. I know y'all are good people, and get to connect with some very high level, amazing individuals, all because you made a decision to invest in yourself, right? For this virtual summit. You guys are going to complimentary general admission ticket. Obviously, we'll share all the information as we get closer to the event, but that's something I wanted to do just to incentivize you guys to show up for yourself for this 5-day virtual event. That's just how good I know it's going to be.
Okay, so as a recap, these last 2 minutes, before we shut the door, at least at the 397 price point, this is what you're gonna get. You're gonna get 5 days virtual training with us, 5 days of daily Q&A with both me and George, personalized tax and financial analysis, temporary access to the recordings, our 2x money back guarantee, and a general admission ticket to our conference Wealth Weekend this summer. All that for the low price of $397. That is probably the craziest. I know it's the craziest opportunity we've ever put together. It's the craziest offer we put together. Probably one of the craziest offers y'all ever seen. And that will last for the next 1 minute. After that, the price will go up to $997. So, as we close out here, y'all, I just want to say a few things. We will announce our giveaway winner, right? After I say these last few statements, like here are some frequently asked questions we get about this training. Number one, do I have to have a business to join? That answer is no. If you're a W-2 employee you still can benefit from some of the strategies that I'm going to be teaching from a tax standpoint and some of the strategies that George is going to teach from an investing standpoint. Now, if you are a business owner, then you're going to be able to take advantage of every single strategy of every single day because the tax code was meant to benefit business owners and investors. Number two, the question we get is, can my spouse join? Absolutely. We actually prefer it if you and your spouse took the class together, so y'all be on the same accord. And then the third frequently asked question is like, what are the dates? And again, the dates are on the ticket, but it's March 30th through April 3rd from 6 p.m. to 8 p.m. Eastern. And you will have temporary access to the recordings. But again, we encourage you to show up there live because you're going to get the best experience if you're there live, and that's how you get your questions answered. George, did I miss anything before we uh, announce this giveaway winner and close ourselves out?
No, I think that's everything. We're just super excited to serve you guys. For those of y'all who are still in the room that are attending, just drop all in the chat. I'm just curious, want to know, the people that we will get to be serving. Rodea, Paul, Samantha, Prissy, Rachel, Robin, Kimmy, amazing. Super, super excited to be serving you guys. But yeah, that's it as far as I'm concerned.
Cool, cool. Well, let's announce these giveaway winners and then we will wrap for the evening. Before we announce these giveaway winners, just know everybody's a winner. Okay, everybody's a winner. If you came to this class and you stayed this long, you learned something new, right? And knowledge is the only thing that people can't take away from you. So everybody's a winner. But for intended purposes for this cash giveaway winner, winner number one of this $125 cash giveaway is Kim Gee or GUI. Kim G or G. Um, Going once, going twice. Kim, I believe she is still in the room.
Yeah,
Well,
just
I'll look
drop
for her,
something in the
George.
chat. Cool, and
Yeah,
I'll
there
share
she go.
mine.
There she goes. Yeah.
Cool. And Wilkins Urimus. I know I butchered your last name. I apologize. I'm normally good with figuring it out, but Wilkins Urimus. I'm sure I butchered that, so forgive me. And I think I just saw you drop something in the chat as well. Awesome. All right, guys. If you guys want to stick around for a few more minutes, our team's gonna take over. And make sure that we get your information. Of course, if anybody else has any other questions as we get ready to close out, feel free to stay on for a few more minutes. Our team can answer those. But other than that, we can't wait to see you in the wealth workshop very, very soon.
Very, very soon. And those of you all who grabbed your ticket tonight, our team will post the recording to this class in our private school community. So for those of you all that want to rewatch this, because I know we went through a lot really quickly, those of you all who got your tickets, once you join the school community, the team will link this video, this recording. That's why we're recording it, so that y'all can be able to rewatch it in leading up to the class. But other than that, we appreciate y'all. We love y'all. Thank y'all for trusting us with your time. And thank you for trusting us with your investment if you did decide to join. But regardless, we love y'all and appreciate y'all. See y'all next time. Peace.
Peace.